Hi there, this is Larry Edelson for my video market update for Monday, November 14th. Well, we certainly are seeing plenty of action, aren't we? Of course, the big news behind all the markets right now is still Europe. The crisis is rapidly worsening, with there now being a very high probability, as I've said all along, that Greece will default and exit the euro to bring back its currency. In addition, the contagion in Europe is now hitting Italy, whose bond market is collapsing, despite the firewalls that were agreed to just a couple of weeks ago by European leaders. So the euro is now taking a shellacking again. Mark my words, the European sovereign debt crisis is still in its infancy. In the weeks and months ahead, here's what you can expect. Further market losses in the sovereign bonds of Italy, Spain, Portugal, and even France. Further losses in the value of the euro currency. More crisis summits by European leaders that basically end up with nothing more than they've generated all along, a lot of hot air, no details, and a very stubborn attitude toward keeping the euro in place at virtually all costs, even at the cost of a widespread depression in Europe and social rebellions. Also expect Greece to default and take back its currency, and a new resounding set of calls for Italy and perhaps even Spain to start considering the same. But also mark my words on this. As bad as the crisis in Europe is getting, it is going to pale in comparison to the US debt crisis when it goes full tilt, probably later next year. And as I've said all along, all of this will ultimately spell not just the death of the euro currency, but of the US dollar as well, and eventually the need for an entirely new global monetary system. Right now, we must also keep in mind that no matter how short-term bullish many markets may sometimes appear, we are in crisis mode, and the big surprises will be to the downside for most markets. We've just seen it in the stock markets, which despite their rallies over the last 2 weeks, are now turning down sharply. The same thing is now again happening in the commodity markets, where gold, silver, and many other commodities are beginning to also roll over to the downside again. So let's now go right to the charts. First up, none other than gold. As you can see from this chart here of gold, gold did indeed manage to rally back to the $1,800 level, just as I had expected. However, given all the bad news, wouldn't you think gold should be trading much higher, near or even at record highs? Well, it's not doing that, and the reason is fundamentally the European crisis is causing savvy investment money to go for cash, for safety, even to the US dollar, rather than any investing really at this time. So the pressure is still on gold, and once you see it fall back below this uptrend line here with the blue arrows, I believe you're going to start seeing gold slide to at least the $1,500 level and very possibly much lower. The bottom line is you should hold long-term gold positions, but refrain from adding any new positions or trading alongside on a short-term basis. Next, here's a chart of silver. Let me preface my comments on silver with full disclosure. I am personally short the silver market again, as I believe that another devastating crash in silver is about to begin. And this time, it could prove to be even worse, with a plunge from the $34 level down to the $25 level and lower in the days and weeks ahead. Fundamentally, there is simply no way, in my opinion, that silver is headed any higher right now when most big money is moving to cash and when the industrial uses of silver are certainly hitting some road bumps as Europe and the United States economies start slumping and heading into the depths of this crisis. In addition, all of my cycles and technicals on silver are bearish. Here's the latest chart. You can clearly see that silver did not even rally as much as gold did over the last couple of weeks, and now it's already turning back down. Notice also how silver remains well below these two important downtrend lines noted by the blue arrows, and even below a more minor downtrend line that was recently formed. Also notice where the bottom of the current channel is, down below the $25 level. That's the path I soon expect silver to head into, and a very sharp decline, which can begin at almost any minute now. Now let's go to the US dollar chart. Naturally, as cash leaves Europe and heads down a rabbit hole for safety, it's going to go into cash. And since the dollar is still the world's reserve currency, that means the dollar's value is going to rise. You can see it here in this chart of the dollar index. After testing extreme support, the dollar started a sharp rally that just recently broke through the upper side of the declining trend channel. While the dollar will still suffer some occasional pullbacks, everything I monitor tells me that the dollar is going to rally a bit more now, probably up to the 81 to the 82 level in the dollar index. Now keep this in mind, this is a short to intermediate term move up in the dollar. The long-term trend for the dollar is still much, much lower, and that has not changed. Now, my final chart for today is the Dow Industrials. Yes, the bounce in the Dow Industrials back up to the 12,187 level surprised even me. But resistance has held strong at that 12,200 level, and now the Dow is squarely back on track for lower prices. I still fully expect we will eventually see the Dow 9,000 level in the weeks and months ahead. But keep in mind, the stock markets now are going to swing as wildly as commodities or even currencies do. Take a look now at the chart of the Dow Industrials. You can see the latest rally and how it stopped dead at the lower end of my system resistance, which is spanning from 12,200 up to 12,800. That is a massive roof of overhead resistance, and I believe that the test of that roof is now complete. Now the market is turning back down, and quite frankly, there isn't much in the way of system or technical support until the Dow gets back to the 10,400 level, which is a critical level, as I've noted for you previously. Once that level gives, I do expect the Dow to then be on a path that will bring it down to the 9,000 level. So right now is not the time to be heavily invested in stocks. Instead, I recommend sticking with my recent recommendations for speculative investments using inverse stock ETFs. That's it for today. As always, please stay tuned to any of my specialized publications you subscribe to for more specific recommendations. Take care. This is Larry Edelson.